In this video today, I'm going to be talking about how you can find those best supply and demand zones to trade from. And by the end of this video, you are going to be able to walk away and start looking to trade these zones right away. So how are we going to find a higher probability zone for you to trade from? It's all about one word, and that is momentum in the market. So first, momentum. How are you going to find momentum? Well, before I talk about the momentum, there are two different markets. There's the market where you're going to find a cluster of up and down in the market, all over the place. Now, this type of market is going to be of a lower time frame. You want to be relying on a 4-hour time frame, a daily time frame, and a weekly time frame. They are the three time frames you want to be looking for this type of concept when looking to take a trade. Now, you can look at a confirmation entry when you're looking to use this, and I'll talk about that in a moment, and also the set and forget strategy. So this type of market you want to be keeping away from. Believe me, if you stay away from this type of market, you are going to find that your profits are going to increase. The stress and the emotion on yourself with trading the markets is also going to decrease, and you're going to feel much better about yourself. So the type of market we want to be relying on is a market where you see the market perhaps doing this. That is the move you are going to be looking at. This is what I call that momentum move in the market. And the way this works is, as I said, it's about picking up orders. If you notice, we have these lows here in the market, and this low went below it. Now, what that was doing is taking out anybody who's bought here in the market, and these stops are basically being removed to pick up more orders. Now, these people buying here are going to be retail traders, not those banks. They may bring up the market to bring in more buyers to push that market down. Now, once they pick up those orders, there's going to be a flood of orders, and you're going to see that momentum move up. And that is the area that you want to be looking to trade from. Let me just go into that more closer. So what we're looking at is, you could see this type of price action. And then we have a push down, removing those lows here. And we see a big push up. This is the area of demand in this situation where it's a momentum move up you want to be looking for a trade from. Now, you may be asking a question, yes, that's easy to see what I'm showing now, but how can I really improve and find those zones to make sure I'm not getting into losing positions? Well, let's go through with some candles. Now, what you're looking for now is a high spread bar candle. This is what you need to find when looking for those zones. Now, a high spread candle is going to appear if we have a bearish candle. And what you're going to find is a choppy market is likely to just do this, up and down, and it doesn't go anywhere at all. And then all of a sudden, you'll find there's a drop out. Again, removing these lows in the market, and then a big push out. This is a big momentum candle and a high spread candle. The open or the low to high of that candle is bigger than the previous candles before it. And even the candle itself of open to close is also bigger than these previous candles. That is the high spread bar and the momentum in the market you need to be looking for. When it removes all these highs, it's breaking structure. Now, you also want to see a follow through here. We don't want to see a drop straight back down. You want to see a good few candles showing you that momentum to the upside. That's going to leave you this area of demand where you are going to find, as the market comes back down, it is not going to drop straight back into that demand zone. It's going to show you a choppy market, up and down candles, and eventually it's going to go up and down, and eventually it will drop into your area of demand. That is showing you the momentum with the retracement. There's a difference to understanding this. Now, if you looked at this area on a lower time frame compared to, let's say this is a daily time frame you're looking at here. This is a daily push up. This area on the way back, perhaps you're looking at a 30-minute time frame 1 hour time frame, this may look like a strong bearish move in places where you have one candle down, one candle up. But don't get caught into the trap of thinking the market's reversing. Keep on that higher time frame for your bias. Remember, this was our swing low. This is our swing high. We know this is our momentum move. That is where you're looking for your trades. So the important concept here is to understand momentum is what you're looking for. Now, applying the fresh and tested zone video, what you'll learn if you go through and watch that video next, that's going to help you to really understand the way the markets move and to find that high probability trade setup that you are looking for. Now, if you're still watching this video to this point, let's have some fun in those comments below, because I'm going to set now some homework for you, and I want you to place in the comments below. I'm going to do my homework, and that's all I want you to put. This is going to shake up some people who don't know what's happening and why you're actually putting that into the comments. But what I want you to do is, after this video, go through and look at your charts. Apply what I've just gone through in this video. I know it's a simple concept of understanding momentum. Look for those areas of consolidation, then with a big powerful move to the upside or to that downside. Look at those areas, mark out those areas of supply and demand, and look to see how price reacts when it comes back to that area. More times than not, you are going to find that area is going to react much better to give you a much higher probability trade entry. And remember to only look at doing this on a 4-hour, daily and weekly time frame. Don't do this on a lower time frame, because you will get caught up in all that movement, that noise in the market. Remember, the banks, they are not looking at those lower time frames. They're studying that daily, the weekly time frame, even the monthly time frame. If you take one thing away from this, take your time. Don't be in a rush to take your next trade. It's going to help with your trading emotions. It's going to help with your profitability. I assure you, once you go through everything in this channel, you are going to start becoming a profitable trader. And don't forget to leave that comment below that you're going to do your homework, and come back once you've done that homework and let me know how you got on. Did you find it a success? Did you find those zones are actually better for you? Now, I hope you've enjoyed this video today with understanding what momentum is in the market. Now, if you have, don't forget to give me that thumbs up, because it's going to help me to know you're enjoying this content each and every time I make it. And of course, if you hang around, that next video is going to come up, which I'm actually going to give you right now, that next video, which is going to be that fresh and tested zones of supply and demand, which I said at the beginning of this video, which I do believe is going to help you more with this concept, with the understanding of momentum in the markets. Oh, before you go, I wanted to tell you about the free pre-recorded webinar, which is going to help you with your money management. Head over to the website below in the description of this video, click on the webinar tab, fill out the details, join, and then you can watch the video straight away.